Oh my God, Apple is up 25% this year. Is it worth buying now? Oh my God, have you seen Block is down 60%. Is it worth buying now or do I wait? Oh my God, AMC is down from $76 to $18. Do I buy now? Oh my God, Meta has dropped to 2020 prices. Is this a time to open a position? Look, okay, if this is you, stop. Okay, please, just stop. Okay? One of the popular ways of turning your money into more money is by investing it, in particular into the stock market. Now more than ever, it's easier to start investing and not as scary as it used to be. But it is a minefield of technical jargon and no real guidance where to get started. I can already hear you now. What do I invest in? What's an ETF? What does ROI mean? APY, APR? Let's go over these common myths and misconceptions about investing, okay? Don't forget to drop a like, comment and subscribe to the channel if you like what you see and stay notified in the next videos. And here we go. Just want to say straight off the rip, this is not financial advice. Please do your own research and do your own due diligence before investing. Okay, so number one, I will lose money. Let's get this out of the way early. Retail investors such as yourself, myself, can lose a lot of money investing in the stock market. However, you could also lose a lot of that money by it sitting in the bank due to the increase in interest rates and inflation rates, which is sitting about 7.5% right now. There are some common trends and reasons why people lose money investing, which are not having an investing plan on investing in certain stocks, as in you just buy everything with no forward thinking, buying outside of your sphere of knowledge. If you don't work for a big pharmaceutical company, maybe don't invest in pharmaceuticals, and not looking or taking into consideration world affairs and what is going on with the economy at the moment. What you should do and what most people don't do is, and please can I have a drum roll? Invest in what you know and what you're passionate about. So here's an example. If you're passionate about cryptocurrencies, you can invest in companies like Coinbase on the stock market. If the crypto market is down, chances are Coinbase stock will also be down. If the crypto market is going towards a new all-time high, chances are so is the Coinbase stock. Additionally, with the introduction of mobile investing apps such as Freetrade, Stake and Orca, you're able to buy sections and percentages of shares of bigger companies. For example, if you're not able to buy a whole Microsoft share, you're able to buy half of it, 25% of it, 10% of it, your choice. I've left the links below for those. By signing up, you get a free share worth anywhere between £3 to £200. Not bad, right? I can make money fast. I'll keep this short. If this was true, then everyone will be doing it, right? Get quick, rich investments don't tend to work. Look at the dot-com bubble, for example. Investing into the market rewards long-term investors. What's required is not passion, but discipline and patience to let your investment grow over time. Famous investor George Soros once said, "If investing is entertaining, if it's fun, you're probably not making money. Good investing is boring." Number 3 is, I'm waiting for the right time and I'll invest after the next crash. Boy oh boy, if I had $1 for every time I've heard that. Remember this quote, time waits for nobody. In the last 100 years, the market has only crashed 4 times. 1929, 1987, 1999, 2000 and in 2008. That leaves 96 years where you could have been potentially profitable if you'd been invested. If you sit on the sidelines and wait, you will miss all those years where you could potentially be growing your wealth. An example of this, one of my favourites and probably a favourite of a lot of people, is the S&P 500. With an initial investment of £500, if you then invested £500 per month into a good S&P 500 index fund over 20 years with a 10% average return, you would have invested £12,500. However, thanks to the power of compound interest, your investment would be worth £41,632, whereas you could have left that money in the bank to earn 0.1% interest if you're lucky, while the bank can lend out every pound of yours 10 times over. But that's a conversation for another day. If you're really afraid of a crash, let me put this in perspective for you. The S&P 500 is made up of huge companies such as Apple, Microsoft, Tesla, Pfizer, McDonald's, Nike, Johnson & Johnson, the list goes on. If the fund went to zero, losing your investments would be the least of your worries. There would be no supermarkets like Walmart to buy food, no banks to hold money, and no natural gas to heat your homes. In short, if the fund collapses, the world collapses. So don't be afraid. The next point we have is you have to be rich to invest. Whilst it's true, money can make money and big money can make big money. However, online platform and mobile apps allow you to start investing with very little capital, giving you exposure to getting invested in some of these big companies. Not starting can cost you more than just money. Think about that. So lastly you have to lock your funds away. Now this is generally false, but it does depend on the asset. Overall, investing into publicly shared companies means you have access to your shares and funds. In my personal experience, I've been able to buy and sell my shares during market hours and can normally top up or withdraw my funds in 3 to 5 days maximum. Saying that, check every app, platform, provider that you use. Don't get stung. At the end of the day, we want to make money, not lose money, so you need access to your funds. So to conclude, investing, it can be scary and a bad experience and losing money can leave a lot of people feeling jaded. However, by sticking to the golden rules and your trading plan, you can start to begin growing your wealth. If the S&P 500 can on average return 10% a year, this is a great hands-off way of doing long-term investing and growing your wealth long-term. As with everything, do your own research, do your due diligence. Stay safe, stick to your plan, and make your money work for you. Jazz out.